Welcome to 2023. It's a new year, and for many of us, each January, we can't help but make resolutions, predictions, or well-educated guesses for what the new year will hold. And this year is no different. For those of you that have known me a long time, I would say that this year, I am cautiously optimistic. Last year was one of the most frustrating years many of us have seen in a long time. The Federal Reserve, in an effort to tame inflation, tightened rates significantly. That led to a repricing of short-term risk, and as a result, the S&P 500 was down a little over 18%. The bond market, as measured by the Barclays Aggregate Index, was down a little over 13%. Last year was one of the few years that both stocks and bonds were down. To top it off, residential real estate slowed to a crawl, and the S&P real estate sector was down 26%. The one bright spot in the market was the energy sector. The words inflation and interest rates were on just about everyone's mind or in their newsfeed. Most of our conversations centered on or touched on these themes. Yet when we looked around us, economic activity was everywhere. It felt to me, and I know to many of you, that things were a little upside down. So what's an investor to do? Generally speaking, when things don't make sense, we tend to emphasize patience and avoid trying to time the market. Having a disciplined approach wins out over luck or panic all of the time. As this chart shows, over the last 30 years, there has been at least one reason every year for us to be worried about the future of the economy or Western civilization. In most of these years, we worried about nothing. While last year was certainly a worry about something year, it was a natural reaction to COVID and the massive policy response that the government and the Federal Reserve put in place to navigate the pandemic. When we strip out concerns about interest rates, corporate earnings, and geopolitical events, and get down to what the markets and the economy really are, it's a reflection of our own behavior, consumption, and demographics. So what do these things tell us about where the economy might go? We are seeing some changes in what we consume and how we consume it. On balance, however, households are, as of this writing, still spending money. We continue to see a shift away from things and a movement towards services or experiences, a trend we've talked about and expect to continue. And as I've said before, it appears that we are on the front edge of a new baby boom as millennials continue to get married and start families in earnest. That forced consumption will continue to build momentum over time and will be reflected in companies that produce things that we, as a society, need. Does that mean everything will be exciting and positive this year? It's hard to know. There are good reasons to think that this year will be challenging, at least for the first half of the year. Many analysts are warning that there is likely to be a mild recession, that dreaded R word again. It's important to note, none of them think that we are going to repeat 2008 through 2010. The Federal Reserve has maintained that they are going to be vigilant in their response to last year's inflation hike, and that will have an effect on the job market at some point. The probability we have another negative year is low, though. Since 1928, we've only seen a negative year followed by another negative year 9% of the time. Most of those came during the Great Depression, the tech bubble, and 9/11, and of course the Great Recession. The aftermath of COVID is not on par with any of those market events. So again, I remain cautiously optimistic. I'll close with this thought. One of the most important things we do for our clients is thinking about and planning for your future. While markets and investment returns are an important component to those plans, over time they take care of themselves. The reason most good advisors don't worry about these kinds of markets is because we know that human behavior at scale is pretty predictable. We, of course, as individuals, are not always acting at scale, nor are the timetables for our own life events always predictable. We understand that and want you to be focused on the big picture, but if your goals change, let us know. We can help you model big decisions or small ones. We're going to get to the other side of this, and there are brighter days ahead. As always, if you have any questions, don't hesitate to reach out. We'll be talking soon.